Okay, picture this for a second. A company is having one of its best years ever. I mean, profits are through the roof, everybody's talking about them, and they're pouring billions into the future. So, what's the next logical step? Well, if you guessed announce the largest corporate layoff in its entire history, you'd be right. This is the baffling and frankly pretty brutal world of the modern tech economy.
So let's start with a number, $35 billion. That's the profit Amazon is on track to make this year, $35 billion. It's a staggering figure, the kind of number that tells you a company is at the absolute peak of its power, just dominating markets and basically printing money.
Now for our second number, 30,000. That's how many corporate jobs Amazon just got rid of. And to be clear, we're not talking about warehouse workers or seasonal hires here. We're talking about the quote-unquote safe jobs, the administrative roles, the managers, the tech folks who are supposed to be the actual backbone of the company. So, 35 billion in profit and 30,000 people suddenly looking for work. It just doesn't add up, does it? I mean, how can a company be so wildly successful and so utterly ruthless at the exact same time? Okay, let's dive into this. It turns out the first clue to this whole puzzle isn't really found inside Amazon's headquarters. Nope. It's on the trading floors of Wall Street, where the news of all these people losing their jobs was met with, applause? The day the layoffs were announced, you'd think Amazon's stock might take a hit, right? But it didn't. In fact, it actually went up by 1.2%. See, to investors, this wasn't some tragedy. It was a sign of operating expense discipline, which is just a really fancy way of saying they were thrilled to see costs being cut. And this, right here, just perfectly illustrates the massive disconnect. For Wall Street, the logic is dead simple. Fewer employees means higher profits, which means the little line on the chart goes up. Yay! But for 30,000 families, it meant immediate panic, frantically updating resumes, and staring down a job market that just got way more competitive. Okay, so let's move away from the stock tickers for a minute and actually look at the human cost of this corporate correction, because behind every single one of those 30,000 data points is a real person with a real story. So, who exactly got the axe? Well, the cuts were pretty targeted. They slammed mid-level retail managers the hardest, along with HR, or as Amazon so nicely calls it, people experience, and the teams working on devices like Alexa. Again, these were the supposedly safe corporate jobs, a whole world away from the warehouse floor. Over on Reddit, the reaction was, as you can imagine, immediate and just raw. One user captured the ripple effect perfectly, writing this: 30K Amazon-experienced resumes just entered into the market. New grads are fucked. Anyone over 50 is fucked. It's a really stark reminder that layoffs don't just affect the people who lose their jobs. They send shockwaves through the entire industry. Another user pointed out the brutal irony of the whole situation. They wrote, "Nothing dries those tears faster than knowing your stock options just shot up 10% while 30K people update their LinkedIn." It's a cynical take, for sure, but a painfully accurate one about the incentives that drive these decisions. And maybe the most damning comment of all was also the simplest one, pointing out the absolute cruelty of the timing, just before the holiday shopping season, too. Now, on paper, the process Amazon has sounds okay. Laid off employees get 90 days to find another job inside the company. But in reality, it's basically a Hunger Games-style competition, with thousands of your former colleagues all scrambling for a tiny number of open spots. It's less of a safety net and more of a ticking time bomb. So, what was the official reason for this corporate bloodbath? In a word, AI. But is artificial intelligence the real reason, or is it just a super convenient excuse? So here's the official line from the CEO, Andy Jassy. He says, as we integrate more generative AI tools, we will need fewer people performing some of the roles that exist today. The message is clear. The future is here, it's powered by AI, and it just doesn't need as many humans. It's all framed as this forward-thinking, strategic move to make the company leaner and more advanced. But what's really interesting is when you put the official story up against what a lot of analysts and insiders think is really going on. On one side, you've got the PR-friendly reasons: AI integration, reducing bureaucracy, and my personal favorite, operating like a startup. Because, nothing says startup culture like laying off 30,000 people. But on the other side, you've got the more likely culprits. They hired way too many people during the pandemic. They needed to make Wall Street happy with those cost cuts we just talked about, and they wanted to reset employee equity. And let's just be blunt here. As one tech consultant put it, If you hear companies say they are laying people off because of AI, they are lying and using that as an excuse. In other words, AI is the perfect PR cover for good old-fashioned corporate cost-cutting. But here's the thing. This isn't just an Amazon story. What we're actually seeing is a new, and frankly pretty unsettling corporate playbook that's being used by some of the biggest companies on the planet. I mean, just take a look at this list. Google, Microsoft, Meta, Salesforce, even UPS. These are all incredibly profitable, industry-leading companies, and every single one of them has announced huge layoffs in the past year, often using the exact same language about efficiency and restructuring. But here's the long-term risk of this strategy. As a lot of business analysts are warning, this relentless focus on short-term cuts can be a huge mistake. The crucial point is, when you get rid of the people who are actually innovating, sure, you might boost this quarter's profits, but you could be torching the company's entire future. Which, of course, brings us right back to our central question. Is this whole thing really about some tech-driven evolution toward a more efficient future? Or is AI just the latest, greatest excuse for making shareholders richer at the expense of the very people who build these companies? I guess that's the $35 billion question.